Welcome to Real Talk with Real Estate Pros, where we bring you exclusive interviews with the real estate experts. We'll delve deep into their journey to success and learn how to go the extra mile to serve their clients' wants and needs. Let's dive in. Here's your host, John Money McKinley.
Good morning. Welcome to another edition of Real Talk with Real Estate Pros. I'm your host, John Money McKinley. Today's episode is absolutely packed with the kind of real estate and credit news that could change the way you buy, borrow, and build wealth in 2025. We're going to be talking about Fannie Mae dropping credit score requirements. Yes, you heard that right. Dropping their credit score requirements. We're also going to be digging in because a lot of folks have been talking about the potential rollout of a 50-year mortgage. Is this going to be a game changer or a debt trap? And yes, we're going to touch on the $2,000 tariff dividends that's been making headlines. But I'm not doing this alone today. I got a very special guest in the building. Credit expert Greg West is here with us to break this all down and give us an inside look at the major changes and potential pitfalls happening in the world of credit. If you ever have any questions about how your credit impacts your ability to buy a home, today's the day to ask. We're taking questions. Please go ahead and drop your questions in the chat. We'd love to hear from you. Before we jump in, though, and before I bring Mr. West on, do me a favor. Like, subscribe to the channel, and share this with someone who you think this would help out. If they're in the world of wanting to do something in the world of real estate or mortgages, we're here to help. We created this show to keep you informed. We're having on guests who bring on real conversations about real estate. No fluff, no spin, not the stuff you see from the television actors, just real talk with real estate pros. With that said, let's get into this, and let me bring on our special guest, Mr. Greg West. How are you this morning, sir?
Good, bud. How are you doing?
I am doing fantastic. Lots of crazy stuff going on in the world of real estate, and I am very grateful you could come on and join us today because you always bring some good insight on where you're coming from in the world of credit, and you dive very deeply also, too, in some of the financial markets, digging into the stock market and other stuff that happens on there as well. But as always, we are here just giving our opinions, and we're not offering any suggestions on what you should do.
Or financial advice, yes.
Financial advice. Thank you. I was looking for that word there. Thank you, sir.
I figured. My video's a little off, but you guys can hear me okay, hopefully. I don't know what's going on the internet, but...
Yeah, well, you know that dial-up internet, because Greg is in a secret mountain somewhere in Kentucky because he's keeping the credit secrets safe because, you know, there may be some government agencies looking for Greg because, you know, he gets out there and helps those folks work on their credit, right?
Don't make fun of my AOL dial-up, man.
Well, Greg, do me a favor. Just why don't you introduce yourself to the audience for the folks that haven't seen you before?
Well, I'm a product of the system. About 30 years ago, I had some credit issues and found a guy that did what I do, and I was shocked at how successful it worked to get the scores up. So I ended up working for him for a while, and then things happened and started my own, and been trying to help people get their credit straightened out ever since. Credit, debt, whatever the problem may be.
Nice. And I know
I know where you're coming from because I've been there.
And I know, full confession here for everybody, I've been working with Greg for well over 25 years, and you've been a valuable asset in helping my clients that have some credit challenges be able to get things in order and things moving. And with that said, Greg, I'd like to go ahead and bring up here, speaking of credit, the nice folks over at Fannie Mae. They're ending their hard 620 score cutoff.
Yeah, I had mixed emotions when I saw that. I had flashbacks to 2008, but where basically if you had a heartbeat and a 5-something score, you could get a loan. I don't know. I hope they're not getting desperate again. I don't know. The reasoning on this is to help more people with thin files, but maybe they shouldn't be getting loans like that. But I don't know. It is what it is.
Well, here's as per the GSE's latest selling guide announcements, the minimum representative credit score requirements of 620 will be removed for new loan case files created after November 16th, 2025. Starting next week, Fannie Mae is eliminating the minimum 620 credit score requirements for borrowers seeking loans that will be sold to government-sponsored enterprises, or GSEs for short. The move, which is in line with the previous change at Freddie Mac, and that's a lot of things people don't know, Freddie Mac had removed their credit score requirements a little while back, is designed to expand access to mortgage credit, particularly among borrowers with so-called thin credit files or non-traditional credit histories. Research shows that reliance on traditional credit score models also have discriminatory impact on communities of color, potentially locking out otherwise qualified borrowers from the housing market. Okay, I didn't. Greg, you've been in credit a long time. I didn't know the credit reports and looked at your. But
trust me, they don't know what ethnicity you are.
Okay, I'm just because I've never.
There's no penalties for being anything other than something. Yeah.
That's news to me on that. But according to Fannie Mae's latest selling guide bulletin, beginning November 16th, loans processed through Desktop Underwriter, or as we call it, DU, will consider borrowers' eligibility based on DU's own analysis instead of relying on the hard 620 cutoff. DU's automated risk assessment tool will determine eligibility based on the borrower's overall financial profile. Here's something to know about this, and this is something I want to dig into a little bit.
Well, before you get into that, I was going to ask you, you know better than I. Is that AI basically, the DU thing, underwriter?
No. The DU,
it's not? Oh, right.
Yeah, DU, before, back in the good old days when we took applications, as we call them 1003s, on paper. We used to have paper, Greg, and we would actually write people's information in the applications with a magical thing called a pen.
Right.
People may have heard of these things. But loans used to be underwritten manually by an underwriter. They still are underwritten by an underwriter, but there's an automated system. One of those systems that was developed is called Desktop Underwriter, and it has its own algorithms and its own system, and it goes in and analyzes the data and information that you put in on the loan application, aka the 1003, along with the credit profile. Credit score does have an effect. However, if you have some major derogatory items, it doesn't matter if Fannie Mae has gotten rid of the credit score requirements. You're still not going to get an approval. However, what I'm seeing this may really help with here, there's a thing we have when we run files through to go for FHA loans. We also run them through Desktop Underwriter and LP, Loan Prospector. That's the one for Freddie Mac. This may, hopefully, is what I'm hoping, is take us away from getting stuck with what's called a manual underwrite, which means the Desktop Underwriter says, okay, I like this file, but I got some caution on it. You need to go ahead and have a real person review this file and sign off on it. If that person signs off on it, the automated underwriting system will be okay with it. And then, of course, you'll be able to sell it to the GSEs.
Got it.
I hope I did not get too deep for everybody in getting into that explanation on.
No, good information. Because usually when you talk to anybody, they're always doing acronyms and letters and nobody explains what anything is.
Yeah, this seems to be
Yeah.
true in today's times. But is this going to help? I think it is going to help a little bit, but it's not going to be a save-all. It's not going to be, hey, I got a 500 credit score. I heard Fannie Mae's no longer cares about our credit scores. Give me a loan.
Seems like it might be the ones that have very limited credit, couple accounts, not very long, that are like low sixes, high fives, but nothing bad, just getting started. Sort of may help them with good income.
Another thing that I want everybody to understand is one of the big factors on what you are looking at as far as your interest rate pricing, it has to do with what your credit score is. So guess what? Let's say we can get an approval for you and we go over here to the wonderful they scrapped the credit score requirements for DU loans, Fannie Mae, and we can get you a loan with an approval. Your credit score is still going to factor into that, because the lower your credit score, the higher the interest rate that you will receive.
Yeah.
I always encourage people. Can I help people? We used to be able to help people down to a 580. Can I help them with that?
Sure.
Yes. But if we have the ability to get you above a 620 or preferably a little higher, we'll be able to open up the opportunity on providing you a much more affordable loan, a better interest rate. And a lot of folks prefer to wait just a little bit longer, do the little bit of work that is needed to be done, so that way they can wind up getting a much better loan at the end of the day. I hope that made some sense for folks.
It does.
Now we're going to get into something which I know has been a lot of talk lately. I've heard a lot of realtors talking about it. I've seen a lot of talk going on the social media and the news as well. Trump and Pulte float a 50-year mortgage as an affordability option. I'm not going to read this whole article. This is long, unlike the other one. Just want to give everybody a breakdown. It's being hinted at a 50-year mortgage. Okay? And this was posted on Truth Social post by Trump, shared an image comparing himself to FDR, the president who introduced the 30-year mortgage during the Great Depression. And we can go back. It wasn't that long ago that you couldn't get a 30-year mortgage. That was before our time, Greg. We're not that old. Before our time, you could not get a 30-year mortgage. That was rolled out, and people back then, I'm sure they said it's the end of everything, and it's going to cause real estate prices to go crazy and put people in debt for life. With that said, though, it opened up some more affordability for folks. The 30-year mortgage, introduced in 1934, replaced short-term interest-only loans with a more stable, affordable model that transformed homeownership in America. Since then, longer amortization schedules, like the 40-year mortgage, have mostly been used for loan modifications, not standard purchases. And just so everybody knows, back during the last great mortgage meltdown, there was a few of these quote-unquote subprime lenders that threw those across the table with the 40-year mortgage. They didn't fly very well, and they did not last for very long. Now, the proposed 50-year mortgage would reduce monthly payments by stretching out the loan. Surprise, but there's going to be some major trade-offs. On average, if we're looking at a mid $300,000 loan, you could potentially be looking at a $200 to $300 a month savings. But there's some factors that we have to factor into there. Is the interest rate that they're going to be offering on this 50-year mortgage if they even do come to fruition? Because this is also against the rules that were put into place after the last great mortgage meltdown. To be qualified for the qualified mortgages to be purchased by Fannie and Freddie, they have to pass the rules that were put into place. 50-year mortgages do not. So, Mr. Trump and his administration would have to do some work to be able to get this 50-year mortgage pushed through and be able to be bought by Fannie Mae and Freddie Mac. Does that make sense?
Sure. Yeah. You sent me that article ahead of time, and I didn't even think of this till just now. Before, you said it was 1934, right?
Yes, sir.
Okay. Before that was 5 years, interest only, and then with balloon payments for houses.
Yes.
Well, wasn't the Federal Reserve enacted in 1933? I think
that's just a coincidence, sir.
I think it was. So then the next year they do the 30-year, which drastically expands your money supply. And now if they're thinking about 50, that's just my tinfoil hat tingling a little bit. I don't know. That's weird. I mean, you can save a couple hundred. It could be good for renters maybe, because then landlords have cheaper payments. Maybe they'd pass that on to the renting, but wouldn't hold my breath there. But yeah, I don't know, man. Just seems like a way to get more people, more money, more debt into the system, which debt is money. So, yeah.
There's pros and cons to this. There is,
yeah.
I'm sure, not we all, but the majority of us can say, look, a lot of people are in a crunch lately. A lot of people are being pinched lately.
Sure.
And would this free up and help people? Yes. And I always ask people, look, not every mortgage out there is right for every borrower. That's why there's multiple different mortgage options. Some people may need, if the 50-year does roll out, may need to be able to become a homeowner, go with the 50-year option. At the end of the day, how many people honestly stay in a 30-year mortgage for 30 years?
Very few.
Yeah. I would bet the percentage is probably about 1% to 2%.
Yeah. Back in the day, it was probably quite a bit, but now with jobs and moving and everywhere, you used to just stay in one hometown your whole life, but that's changed a lot.
Exactly. So we've definitely seen some things happening. And like you said, for the investors, I'm sure if this rolls out, I'll be getting calls from investors going, hey, I want to do this because now I can pull some capital, some equity out of some of my rental properties. And even though I'm increasing the loan, that will keep me from going into a negative cash flow position. Which, if you're a real estate investor out there, I strongly advise, and I recommend this to all the investors I work with, if it does not cash flow, why are you thinking about buying it? Very rarely is there the opinion on why they're buying it if it doesn't cash flow justify buying it.
Nope.
You buy rental properties to have a positive monthly cash flow. That's anything else that happens above and beyond that, such as appreciation, such as principal pay down. That's the gravy on the side. You can't live on gravy, even though gravy is delicious. But I'd like to get in because I know you wanted to talk about this, Greg, and bring this up. Speaking of money, Mr. Trump talking about pennies. What will companies do without pennies? Have you been hearing about this, Greg?
Yeah, I was actually in Kroger this yesterday, and there was signs up about please try to have exact change with pennies. And me and you had talked about this a couple weeks ago about what are they going to do, and you mentioned rounding up. But apparently, it looks like some of these companies have come up with pretty good answers. They'll round up or down depending on if it benefits the customer, depending on which company it is. And some are actually doing gift cards if you bring pennies in. Unique way of solutions to handle it, but. So that was interesting. But the main reason I'd wanted to bring it up was, and this is not investment advice, and I'm definitely not telling somebody to do this at all as far as melt values and whatnot. But pre 1982, your pennies were 97.5% copper. These new ones are 97.5% zinc. And so theoretically, if you were to melt the penny down, there's about 3 cents worth of copper in a penny. There's 0.008 cents of copper in today's penny. So that's one reason they stopped making them, because then you add labor in the die and all that, not the die, but the metal. To make them, it's well above a penny. Well, I think next they're going to focus on the nickel. It's the totalitarian two-step, basically. They'll go up to the next one, because nickels are 75% copper, man. There's actually more metal melt value in the present nickel. So they're either going to have to change it to have it more of a cheaper metal, or they'll end up getting rid of that as well.
Now,
I'm saying is if you want to save your nickels, like I save older pennies, you might triple 4 times your money here in 5-10 years.
I would like to say and state, defacing American currency could be a federal crime. And John Money McKinley does not endorse anything that would involve a federal crime. We love the federal government. We love
Greg West does not
IRS.
either. I was just stating facts about what's in the coins. I'm not telling people to do that.
Okay, I just want to make sure, Mr. West. I do not want to be on here. Get a call from the Google people. Boop, 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 boop. Oh,
well,
yes.
you can look at it from numismatic purposes, like silver coins.
Mm-hmm.
You can get now like a silver dime's worth like $4 because of the content of silver in it. Well, as you debase your currency, copper could be the new silver. So if you got a nickel in the future at 75% copper, I mean, you're going to get a premium for it, most likely, like you do the premium pennies now, the pre-82s, for people that know anyway. But yeah, that was the only reason I wanted to bring it up. Well, that was neat.
Okay. Well,
I invest for nothing.
I would like to move here because we have, speaking of money, we have some very interesting news that I would like to bring up here. And I'm about to bring on another special guest, so you please have to wait a moment here, sir. And go ahead and bring on this special guest and let him speak for a moment.
Without tariffs, this country would be in such trouble, as they were for many years. That's why we owe $38 trillion.
You hear that, Mr. West? Without tariffs, this country would be in trouble. That's why we were in trouble before. Right there. He's talking about the tariffs. It's very important here.
And one of the things we're going to do, we're going to issue a dividend to our middle income people.
Oh. Did he just say dividend to the middle income people?
Dividends. I like some dividends.
I like dividends too, sir. I would consider myself middle income. Would you consider yourself middle income?
At least.
Mr. President, just so you know, me and my friend here, Mr. West, we are middle income. Let's hear some more about this.
The lower income people of about $2,000, and we're going to use the remaining tariffs to lower our debt. We're going to be lowering our.
Oh, wait a minute, Greg. That means we could be getting a check for $2,000. I'm liking that,
which is a national security thing. So we're doing a lot of good work, and the numbers were reported so incorrectly. The real
now this is something that we've been hearing, because the number, apparently he just told us, the numbers unfairly have been reported inaccurately. So let's hear
our trillions of dollars have been taken in or have gotten in terms of investment from the tariffs. And so if that were ever reversed, it would be a disaster.
Trillions, Greg. Trillions have come in because of according to what he's saying. I think $2,000 is a just for us to be able to get. Wouldn't you agree with that, Greg?
Sure, 100%.
It would be a national security problem for our country, and nobody thinks it's going to be reversed. I think we had a very good court case. As you know, it's before the Supreme Court right now. But if that were ever reversed, people say, oh, it's $1 billion. Some people said, oh, it's $2 billion. Well, that obviously we can handle very easily. But this is trillions of dollars we're talking about in terms of the...
I'm a little confused there. We were at trillions, which that's a nice number. That's a lot of money. But then it went down to billions, and he was like, "No, we could still do all this." That's what I gathered from what he said. Am I correct on that, Greg?
Yeah, man. I sent because I wanted to look into this because it all sounded weird to me anyway. And I want to make something very clear for anybody who's new here. I don't pick sides. I don't care who's the president, whether Biden, Trump, Obama, whoever it was. I look at things from a logical standpoint, and if stuff doesn't add up, I point it out. So I'm not on anybody's side here. So I don't want anybody to get any derangement syndromes of any sort.
Yeah, I want everybody to know that too. On my perspective, I look at it this way. Look, right wing, left wing, whatever you decide to be, that's your choice. We don't. Exactly. The only reason that I brought this on the show today, and Greg and I want to talk about it, is, hey, we talk about money here. We talk about real estate. We talk about finance. We talk about credit. And there's some serious talk going on in the media, and the president has been speaking a lot more lately about seriously writing checks, which is going to have, if it does happen, it's definitely going to play a big factor in what happens in the economy, what happens with the markets, interest.
100%. Yeah. That's why I wanted to bring it up. It's an unavoidable topic. It doesn't mean you're on one side or the other. So I want to make that clear. But he's exactly right as far as the numbers go. I sent two different articles to you, one from CNN, which is one side, and I think the other one's from Fox or something. Anyway, even the amount that they brought in on the tariffs doesn't even match. Both of them were in the billions, but they were off by quite a significant amount. And then I took, of course, 150 million people is what one person said. Because then you get some people say, well, is it every citizen or is it just the ones that filed taxes? So I did 150 million because that seemed like a decent amount number. And times that by 2,000 comes to 300 billion.
Right.
So if the tariffs bring in that, it's a doable number. But if they haven't, which those two articles show that they hadn't even got in 300 billion. So I don't know. But if they did $1 trillion like Trump says, well, then it's possible.
I mean,
but every article I looked at, the number was different. So I don't know.
And I've been noticing the same thing. Here's another one of those articles just sent over. The numbers just don't check out. Economists rip Trump's $2,000 tariff revenue plan. President Donald Trump has promised Americans they'll receive a $2,000 check from revenue generated by controversial tariffs. But financial experts say the numbers just don't add up. A dividend of at least $2,000 per person, not including high-income people. So everybody needs to understand that. Apparently, those high-income people will not get any of this. But that's a lot of that high income is going to depend on what the government classifies as high income. The president did not elaborate on his plan, including what income limits might be and whether children would receive payments. Wait a minute. Children? I didn't realize that children got to get tax money, do they? I'm confused here.
Well, I think they had children included in the last stimmies from the thing back in 2020.
Yeah, but it didn't go to the children themselves. It went to the parents, right?
No, it did. Yeah.
Okay. So in other words, let's say you have two children and he does do this stimulus and it is including the children, then a house could potentially get, if it's just a single parent, he could get $2,000 for him, $2,000 for child one, $2,000 for the other child.
Yeah. What it sounds like.
Huh. Interesting. Well, they better hope their children don't find out about that's coming through, because there's going to be some teenage kids going, Mom and Dad?
Where's my cut? Tariffs.
we heard there was $2,000 that came that was for us. where's my check? Which I'm sure would lead to an interesting conversation at the dinner table. Or
Yeah.
Or do people still go to the dinner table anymore, Greg?
Some, occasionally.
Okay. I'm just checking. Well, with that said, I appreciate you being on here, Greg. I think we did a very good dive in and better look at what's happening in the world of the mortgage changes, the no credit scores, the 50-year proposed mortgage, along with our hopefully $2,000 tariff stimulus. Well, I wouldn't call it a stimulus check, tariff rebate checks for Americans.
Or dividends, what he calls it. I think I didn't invest in anything to get a dividend, but I'll take it.
Yeah, I don't know about you, but every paycheck I get, I'm doing a lot of investing in taxes. So, hey,
Yeah.
I think that would be a good thing. Well, if you would, Greg, if people have any questions on credit or want to get a consultation with you, what is the best way that they can get in contact with you, sir?
I'll tell them. I wanted to do a little advice first. When I mentioned earlier in the presentation of 2008,
Mm-hmm.
I have a pretty good customer base as far as to see what's really going on economic wise. And I can just tell by the amount of my clients that have lost jobs that it's probably going to be an ugly 6 months to a year. And some people's credit is going to take some dings. Your credit cards are all-time high debts. So basically, I want to let people know you can recover your credit quickly. Don't let it affect your mental health as far as if you get debts and whatnot. And like there's some things that potentially you could let go if you had to. I'm open. You can call me. If I don't have the best route for you, I'll send you a place that can, because sometimes even bankruptcy is a better route than credit repair or counseling. It just depends what you've got going on. Or with John refi mortgage. I mean, there's options. So don't let it affect your mental health with the economic times we're going through, because it's similar to 2008. It's not all roses like they're portraying on the media. There's some weird stuff going on. But you can get in touch with me at 859-625-4546, or you can go to westcreditservices.com and you can put your information in and I'll give you a call myself. And I'll be the only one calling you. This is not a big, huge corporation.
Well, I appreciate you sharing that, Greg, and thank you for bringing that up. And look, we are definitely going through some challenging economic times. And at the end of the day, you got to have a roof over your head for your family, and you got to be able to put food in your bellies. If you have to let something go, that would be you will be able to recover from it. Call
Right.
Greg. He'll give you a consultation. He's not going to charge you anything for an initial consultation. Don't think there's a cost you have to pay
Nope.
to have a consultation with him. It's the same thing with me
Nope.
on the mortgage side of things. We don't charge any money. We don't charge for credit reports, which is something, just so everybody knows, there's a lot more mortgage companies out there now starting to charge people for credit reports up front due to the cost, because the cost of credit reports has gone up dramatically, which in future shows coming up in the next year, we'll be talking about that as well, because there's a lot of talk on what's happening with the cost of credit reports.
Yeah.
But with that said, I'm going to put you back in the green room, sir. Going to say goodbye to everybody, and I will be back with you in a moment, Greg. Thank you all very much. I appreciate you being here for another edition of Real Talk with Real Estate Pros. We try to have this show once a week. Been really working on delivering some good special guests coming on. Next week, I have an incredible commercial real estate expert who is coming on the show next week. His name is Chris Riggins. He's over there with Lucky Money Real Estate, which I like the name. It fit perfectly, goes along well with John Money McKinley. And he's going to be breaking down what's happening in the world of commercial real estate. This will be the first time that I've had a commercial real estate expert on my show. So I'm excited about that. That's going to be next Wednesday at 11:30 Central Time. With that said, do me a favor, like, share, and subscribe. Really trying to grow this channel, really trying to get some more interaction with the viewers so we can provide to you the information you want. The information about what's happening in the world of credit, what's happening in the world of real estate. Really be able to tell you what's going on in your backyard. You all have a fantastic rest of the week, and I will see y'all next week.